Today with a good friend, Richard Krugel, who I think of all the speakers is probably here from the greatest distance away. He is in South Africa, and he's joining us this morning. Richard is the lead technical analyst at Price Action and Income. He's a big believer in the science of how price moves and credits his success to his ability to understand and leverage this market geometry to his advantage. Today, Richard is going to be talking about unlocking the science of price action, how to stay on the right side of volatile markets, leveraging market geometry to your advantage, and he's going to give you a sneak peek at some of the strategies that are working well for him today. And with that, I'd like to welcome Richard to the room. Richard, good morning. We're delighted to have you here. How are you doing?
Raleigh team, good and you guys.
Morning.
Some great intro music as always. Thanks again for having me back. It's always a pleasure being with you guys, especially with the lineup that you guys have for this week. I mean, some of these guys I've been looking up to when I started trading. So some real market legends there. So I'm really honored to be here. So great. I can't wait to show all the listeners what I have to show.
That sounds great. Well, once again, we're delighted to have you here. You can go ahead and share your screen and take it away.
Okay. Let me get that set up. Always forgetting a button or two.
There we go.
Now. Looks good.
That looks
All
good, and
right.
you sound great, so you're on your way.
Perfect. I'm going to drop the video just for a little bit. I'll come back when we do a Q&A a little bit later. Sorry. And then I'll go through the slides, and yeah, I'll be happy to answer some questions later. I've got some great material to show you. Want to jump into some live charts as well. So yeah, without further ado, let's get going. Right, everyone, thanks for attending today's my session. Like I mentioned to Raleigh and the gang, I'm really honored to be amongst so many of these great traders, or should say all of them are great traders. A lot of them I've been looking up to when I first started trading, some big names here. So I hope what I've got to show you today will be both educational and also something to learn new. See how I approach the markets. I use market geometry, but I prepared some great slides here for you, and let's just jump right into it. I just want to quickly get some of my speaker notes out, and maybe this is something I discovered recently, is this laser pointer, so you can see what I'm talking about. Right, guys, so the title of my presentation, Unlocking the Science of Price Action for Consistent Gains, and how you can discover the next potential trade setup that could generate up to 45 times in returns using a very tight stop loss. Now, the question, guys, is how would you like to position yourselves in trades with these kinds of returns? A lot of traders I know would obviously think this is impossible. Well, I'm here today to tell you that it's not. And I will be showing you exactly how you can empower yourself with the right tools, the skill set, and the mental attitude to achieve this. Just think about what you can do with a windfall like that. Even if you only made half of it, would you be interested to know how? I certainly hope so. But first, thanks for attending my presentation. Wherever you're from in the world, I sincerely hope that what I have to show you today will be of tremendous educational value and offer you a new way to analyze the markets and read price action. So what's my goal for today's presentation? Now, what I personally want is to ensure that you understand exactly, step by step, what you need to do to spot multiple trading opportunities, similar to the ones I'll be showing you shortly. And I also want to show you how you can fish for yourselves by learning a method that has brought many traders success. And all I ask is that you please stick around until the end of this presentation and try to absorb what I have to show you. We have included a lot of bonuses that's only available for today's attendees, and I promise you, you do not want to miss out on them. All right, more specifically, my goal is to show you how you can use market geometry to nail setups at the most opportune time and earn a living trading starting today. For those who do not know me already, my name is Richard Krugel. I live in sunny Cape Town. It's an absolute belter of a scorcher day today, sitting in my office sweating, which is obviously great news, but probably the last little bit of summer we're going to have before winter creeps in. Just a bit of background there. I'm an ex-Navy diver, very similar to the SEALs, the Navy SEALs team in the US. I'm a dedicated family man. I have a young family. I've been a professional trader for more than 10 years. Something I'm quite proud about is that I was also the first person to complete a circumnavigation swim around Spain's large island of Mallorca. It was about 223 miles. I set a world record there. Something I'm even more proud of is that over the past few years, I've helped many traders experience freedom, and I've trained over 4,000 traders here at Price Action Income with the exponential profit system that I personally developed. And it was with this exact system that I managed to deliver trade results that have generated 300% in returns for my members with my trade calls using this exact system. Right, guys, but that's enough for me. And here's what you will discover today. I will show you how you can rapidly and dependably grow your trading account, even up to 4 times in less than 8 months. This is something we've done year after year. It's a very, very great way to approach the markets and trade the markets. Just keep in mind that I don't risk any more than 2% of my account equity, and I don't invest massive capital on the front end either. But before we get into the meat of stuff and to dive into some charts and some results, I just have to read the regulatory disclaimer. Guys, these results aren't typical. I will show you trade setups that have generated thousands of dollars for me and some of our members. My results certainly aren't typical, and the average trader who attends any average trading gets 0 results. But however, I'm happy to show you exactly what's working for me for free today. So this is not for the get-rich-quick crowd or anyone who thinks there's no risk involved when trading with real money. Before we begin, let's take a look at a few of these EPS setups we've traded recently. One of my absolute favorite markets is crude oil, and as you'll see, I trade this on pretty much any market, whether it's Forex, stocks, ETFs, commodities, whatever it might be. I even have members that trade my methodology with options. A great trade here in crude oil for a total account gain of 26.78%. And you'll probably see in a lot of these slides that I use extremely tight stop losses. But this methodology is also scalable if you want to use smaller time frames or even larger ones, which we'll probably talk about a little bit later. Great trade. It lasted just a few days and reached final target with no issue. Here's one on XLK, is a technology sector ETF for a gain of 9.44%. Again, a pretty good tight stop loss, and you'll probably start seeing a few images here that I use pitchforks, and this is one of the market geometry tools I'll be discussing in greater detail a little bit later. Also, a very good trade to be part of. This one lasted for about 2 weeks. So it really depends on the approach of whether I'm taking a smaller term trade or longer term trade. As for example, here on the US dollar CAD, one of my absolute biggest trades I've ever taken with some of my members that actually participated in the trade. It's very not easy to see, but it was a very tight, small stop loss in this, and I gained 64.45% return on count equity in one single trade. And this one lasted just under a month for a beautiful, beautiful swing trade to the upside. But again, we'll be jumping into some of the setups and how I actually do find them with these tight stop losses. Again, guys, I trade multiple markets. It could be on anything. It could be US oil, crude oil. You could trade the ETF, bond futures, Boeing stocks, pound US dollar, copper, Facebook, whatever the market might be. This methodology works on all of them. And the best part of all of this is that each of these winners happened in a span of just 8 months, resulting in a 301.38% total account growth, even after accounting for losses. This is a bit of the equity graph. It was a total of 37 trades and managed to have an explosive growth in equity. Obviously, this is still accounting for some losses along the way. I have an average win rate of 8.15, win of 8.15%, account growth with the risk reward of return on investment, of 4.41. Right, guys, so these results are certainly impressive, but they were only possible with the power to forecast the markets. But the ability to do so wasn't developed overnight, guys, and that I can really assure you. I remember opening my first trading account over 14 years ago with just $50. And as you'll probably know, that $50 went really fast. I really thought that I'll be able to become a millionaire within a few months' time, believing all the, how can I say, BS that's out there of these marketing gurus selling stuff that simply don't work. And I fell for all of them. I bought course after course. So this might sound really familiar with a lot of you, but it's probably how many traders actually start, and I was definitely one of them. But I'm a guy that does not easily give up, and eventually I landed a job on a fast-paced trading floor here in Cape Town. It was an invaluable experience, but after a few years, I was ready to trade and live on my own terms. So what changed, you might think? Well, I discovered that in any market, regardless of varying models, that there is a science to how price moves. And this is what's called market geometry. And to me, it really changed everything. So for those of you that do not know what market geometry is, the way that I define it is that it's an analysis technique that attempts to expose the underlying symmetry that's prevalent in all markets. And using specific drawing tools to expose that symmetry is what's called market geometry. And guys, don't worry if this sounds confusing, I will be jumping into some of the tools that I use on live markets in a short while. But what I want you to understand, guys, is that I discovered this the hard way after many years of blood, sweat, and tears, literally. And if I had one wish to avoid the emotional roller coaster that I had to endure to try to make a success out of trading, then my only wish would be that I knew what I know now earlier on, and that I more actively seeked a mentor that I could show me the right way. Sorry, guys, how would you like to avoid all the pain I went through and learn from everything I went through? Just know that my struggles can really be your success. So today I want to show you an easy way to eliminate the heartache. What would you do if you could eliminate all the mistakes and grow your account quickly? I want to give you an opportunity to learn from my mistakes. And guys, like I said before, I've guided our traders over 300% account growth since we have launched. And I would really like to know if you can be able to say that you did the same. So this is where we're going to start delving into the 3 elements for me that makes a perfect trade in the setup. And what I'll be discussing next is the drawing tool that is hidden in plain sight on your platform. I want to be talking about why the trend is not necessarily always your friend. You probably all know that term out there, unless you obviously know where to enter into a trend, that is. And the surprising method that I use to pinpoint high probability trade opportunities in a systematic yet consistent basis. Now, this method of trading you won't find anywhere else, and I truly believe that this will give you a unique perspective of the markets and open up a new world of trading possibilities you might have never known existed. All right, guys, and this brings me to, you probably noticed that from a previous picture, one of the most used market geometry tools out there is the Pitchfork, a very underutilized drawing tool that people probably maybe had a look at once, completely forgot about it, gathering dust there on the side of your trading platform. But in each case, I'll be going over some examples of how I apply pitchforks, how to draw them properly. If you're unfamiliar with a pitchfork, don't worry, I'll be jumping into some live charts now. And just applying this to your chart correctly gives you instant perspective. But guys, as you all know, I use TradingView to perform most of my analysis. I also use NinjaTrader. I first started off MetaTrader 4. So whatever platform you might be using, you probably are familiar with what they call the Alan Andrews Pitchfork, which was developed originally by Dr. Alan Andrews. And some platforms might just call this the Alan Pitchfork or the Andrews Pitchfork, and TradingView's case is called the standard pitchfork. Now, to draw a pitchfork, especially over the standard one, you kind of want to use this over trending markets. In this case, just an example on the gold US dollar, spot gold, on a downtrend, you want to be drawing your pitchfork sloping in the direction of where you believe price might be heading to, and you want to try to keep price contained within these median lines, which I'll be going over right now. And to draw a pitchfork tool, whether it's a standard pitchfork, or I'll be going over some of the alternative settings that's also available that I also use a little bit later, you have to select 3 anchor points. In this case, you would be selecting, let's say this was a top, and previously, let's say the market was going up and then it started trending downwards. You select a starting point as your first anchor. Your second anchor would be a lower low, and your third anchor would be a higher low. And what happens then is that there is a center line, what we call a center median line, that's projected from the starting anchor point or the origin of this pitchfork through the middle of this range where your second and your third anchor point is. And that will then obviously create an angle, in this case sloping downwards. And then parallel to that, you get an upper median line and a lower median line that is just projected parallel to the center median line from your second and your third anchor point. Then you'll probably notice that I've also included red lines, and I call them lower and upper warning lines. Now, these lines I have on all my pitchforks. They're very important to use, especially when you're dealing with very strong trending markets, in some cases corrections. We'll be talking about corrections a little bit later. And they quite often find extreme moves. So quite often you'll see that when, in the case of a downward trend, perfect example here is that once price reached the lower median line for the first time, you had a change in trend. Now, if this was an even stronger sort of move to the downside, you'll quite often find that your lower warning line, in case of this bearish example, would then stop the market also and turn things around. Next slide. The shift pitchfork. We also have a modified shift pitchfork. It's also a very popular one to use, but in my trading, I found that the shift pitchfork probably works the best, and I use this pitchfork setting about 95% of the time. But just a quick history on the shift pitchfork. How the story goes, there was a New York trader called Jerome Schiff who approached Dr. Alan Andrews back in the days, and he proposed that the standard pitchforks angles, if we can go to the previous slide, in a lot of cases would be too, how can I say, angled too sharply, when in many cases you'll have flatter sort of either corrections or trending markets. And how he got this shift setting was, it was actually then named after Jerome Schiff, called the shift pitchfork, was then in this instant, when a market was moving upwards, he would use again 3 anchor points, starting, let's say in this case, in this upward move with the first anchor, in this case a higher high and a higher low, same as you did with the standard point, the standard pitchfork. But instead of where the center median line started from, the origin point over here is just sloped at the 50% of the range between your first anchor point and directly above it to where your second anchor point would be. So it starts right in the middle over there, which results in a much flatter angle. Now, what I find particularly useful about this setting is that it works enormously well with trying to find the end of corrections. You probably noticed in one of the elements I've talked about before is that the trend's not necessarily your friend. So obviously knowing where to enter into a trend, my methodology teaches trying to get into the end of corrections within a trend, and then applying pitchforks in many cases to shift pitchfork, because corrections are mostly not as steep angled as trending markets would be, if that makes sense. Which this is a picture perfect example. The market made what we call an ABC. Some guys might call this a zigzag. This was just a single zigzag. And then the market just stopped at the upper median line. and it reversed lower, and the previous trend in this case made a low here, corrected higher, and the trend continued again. Again, guys, the same sort of lines here. I've got low median line, upper median line, and your warning lines also included. You also see these little 50% dashed median lines is what I call them, that I've thrown in there. They I like to have in there, and they, for me, visual markets. A big problem that a lot of traders have is like, which setting should you be using? How do you know the setting that you are using is the correct ones? And in many cases, just by looking at how a price interacts with your median lines, and in a lot of cases with these 50% dashed median lines, will give you a very good indication that if market's respecting that, this price is respecting those, that you are using the right setting. All right, I just quickly wanted to jump into a live chart here. And this explains the pitchfork settings. I'm going to pretty well for you guys. This is an example on Australian dollar, US dollar. We were also tracking this on the 6A, which is the futures contract for the Australian dollar, US dollar. And here I drew a standard pitchfork. You know, there's many ways that people can try to draw pitchforks. And this is what I teach in my EPS, with my EPS methodology. What about instances when you have sharp drops like this? You probably all remember last year, now around about mid to end of March, we had sharp reversals in a lot of currencies in some of the markets. When you were to draw a standard pitchfork here, for example, that would be absolutely useless because it's not containing price properly. So I have to be dead honest that I waited for the first proper decent correction, and I'm a very patient trader, to be honest with you. And there are also many markets to trade, so I don't bust my head around just trying to find trades in one particular market. I normally have a basket of trades or instruments that I continuously follow. And it was only after this proper decent correction last year that I drew my standard pitchfork. And you'll see from just this setting here, in this case, we couldn't draw this again to that first higher high and this higher low. It wouldn't have worked. So something I teach is that try to figure out where your next bullish impulsive move is, in this case, a bullish example, and then we'll see where the origin point was. Count back 3, including this one, 1, 2, 3, and use those as your anchor points. And in this case, it's drawn a standard pitchfork. And you'll see in this example that it worked tremendously well for what's this, 1, 2, 3, 4, 5 months until price almost reached this upper red warning line for a second time around, and price has since moved lower. Now, there was many tradable opportunities in between here. I'll be discussing one that we've personally taken over here and why we've taken it over there. And that will be with element 3, discussing how I actually get into trade, setting targets, etc., etc. So guys, yet again, this is your standard pitchfork setting. Let me just blow this up a little bit for you. In TradingView, if I go to settings, it might differ from your platform. You see I can go here and select a shift pitchfork. And this is exactly what I've meant from that previous example. It works at a much flatter angle. I tend to want to slope pitchforks in a direction of a correction. In this case, this is not sloping in the direction of this trend. So I want to keep a higher time frame pitchfork that slopes with the major trend, like I did with the original one, and then almost exclusively use shift pitchforks to figure out where the end of corrections might appear within a trend, and then trade the trend higher when I believe that the trend has resumed. And guys, that's just a quick overview of a standard and a shift. I do also use modified pitchforks, but not in the same sense as many people would think. I use channels instead, which is exactly the same thing as a modified shift pitchfork if you use the same anchors. But that's something that I additionally thrown into my EPS methodology, if this is something that interests you guys. All right, so just quickly, I got a chart prepared here on gold, just as an example. This is what I've meant by, in this case, Just an example, guys. Price moving up. This could be on any market. Forget it was just on gold. We have what we call as a single zigzag over here. And this just is a really good example to show how just using the right anchor points over a correction, that how these median lines tend to create support in this case after a bearish correction before the major trend resumes upside again. In this case, price found support at the lower median line of the shift pitchfork, which again I'll say is my go-to shift pitchfork setting or pitchfork setting, sorry. If I'll just quickly show you on the standard pitchfork there, then you'll see that it's just angled too steeply and price didn't reach this lower median line in this case of the standard pitchfork. Because corrections are flatter angular than in nature than a trend would be, I prefer using the shift setting. All right, so let's just quickly jump back to the presentation. So there, guys, we talked about the shift pitchfork and how I like to use them over corrections. I just want to, before I move on, mention I do follow 4 different corrections and the variations that do come with them. I like following triangles, whether it be ascending or descending, symmetrical or expanding triangles. I like to follow the single zigzags, double zigzags, and expanded flats. And what I teach in my methodology is how to identify the underlying characteristics of what these different corrections tend to display. They do have clear characteristics, and how to use then your pitchforks in the majority of the cases, your shift, like I'll say again over and over, pitchfork to try and figure out where these corrections might end within the trend and then get into a trend, or sorry, into a trade when you believe the trend has resumed again. And quite often with very, very tight stop losses and at the most opportune time where your profit potential is at its highest and your risk at its lowest. Right, guys, this brings me to element number 2. Trends can be very deceptive and luring traders into their deadly trap. And what I mean by that is so often you'll get beginner traders that try to do breakout trades, for example, thinking that a trend is just going to resume just to see a market move against them. Depending on what time frame they're looking at, if they're looking at dailies or even 4-hour time frames, depending on where their stops obviously are, they will most likely going to take most hits on their stops more often than not. So for me, it's very important to identify, and this is something I do teach in my methodology, identify trends, know what the trend is, huge pitchforks that slope with the trend, wait for pullbacks, and quite often using simple techniques like Fibonacci extensions, you can quite often anticipate where a trend actually might take a break, where there might be profit taking and then resulting in a correction before it actually happens. And then using methodology to track the trend or the correction, sorry, in this case, and then enter when you think the correction ended and then get into a trend rather than just trying to jump blindfolded into a trend believing that's just going to continue, which is, in my opinion, a very dangerous game to play. This is just an example on a EuroCAD on a daily time frame. Before this, price was actually coming down pretty hard. This probably doesn't describe the best, I suppose, but what I really want to mention here is this took, I think, multiple days to complete, this zigzag movement to the upside. And I actually sloped a pitchfork to the upside here. I identified an area where I believe this correction was going to end and then got into it a little bit late on this one, but either case, we rode it beautifully down to the downside. Price just collapsed. I actually identified what I thought the pattern could be before it entered, and knowing what this pattern tends to behave like when it ends is exactly what happened. So also knowing how patterns evolve and the characteristical behavior is what I also teach with my methodology. And then, guys, element number 3, getting the entry perfect. Learn precision entries for maximum profits. Very important, guys. There's one thing planning a trade, obviously knowing where to enter into a trade, Also knowing how to manage your open trade, where to place your targets, and also trail your stops is something that's not very talked of quite often. Also very important for me, and I'll give you some examples here. This is where I've created a set of entry confirmation rules. This is something I've created so I don't go and or hesitate about getting into a trade. Especially, I don't want to miss a trade either. This is why I use the methodology, knowing about an area I want to trade from before price actually reaches there. So I have more than enough time to prepare to get into a trade. But these necessary conditions is what I'll discuss next. I look for reversal candlestick patterns. And I also look at the only indicator that I use, which is called momentum divergence. I look at that on the MACD histogram. And very, very, very importantly, all these conditions must appear at an area of market geometry that has been identified beforehand. I just quickly want to go over that US dollar Canadian trade that, sorry guys, let's take a sip of water, that I showed earlier on. This is what I'll typically do. We had a previous move going higher, price went down. It went up. In this case, I would have used the third anchor point on the shift over here, but price failed to break this low. It made a new one, a lower high there. As it was coming down, excuse me, I drew a shift pitchfork. And before price was approaching this lower red warning line, I identified a price zone. And this is what I'll call either a potential buy zone or a sell zone where I believe a correction might end. Again, guys, before price reaches there, it's not done after the fact, it's done way before the time, so I have enough time to prepare to get into a trade. And this is what I mean by momentum divergence. This is just an example. And I follow the MACD histogram for this. I don't use the signal line or the MACD line. In this case, I just want to see a proper visual slowdown or decrease in momentum on the MACD, on the histogram especially. For those that does not know what momentum divergence is, great example over here. It's when a market, in this example, bearish moving down with quite a lot of, I would say, very few in between corrections, moving down strongly. Initially, this momentum was quite strong, and as it moves down, 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 the momentum at which it's moving downwards with on the MACD histogram starting to dry up. So it's diverting in the opposite direction of what the price was doing. This is what's called momentum divergence. Very important, guys. I want to see this happen at those box, for example, that I drew before. This must all happen within that area over there. And guys, then I also follow various reversal candlestick patterns, which I teach. The ones that I quite often find is the the best ones to follow. And again, that must also happen within the area of that I identified before. And then entry is simply a matter of placing a entry, a few ticks. In this case, if you're dealing with Forex or pips, as they would call it, above a reversal candlestick pattern. We have one over here. I actually call this a bullish flank doji pattern. Again, guys, with the time we have allotted for me today, there is quite a lot of material included. So I'm sorry if I do not go over all the candlestick patterns. There are literally millions out there. I've just identified the ones that I like to see most often, and they've been working really well. So I'll be placing an entry slightly above the reversal candlestick pattern. Again, guys, I just took those lines away so you can clearly see what's going on here. This all happened at that lower red warning line in the previous example. I placed a stop loss a few ticks below the reversal candlestick pattern, and then switch back to my higher operating time frame. And what you'll see over here might be difficult to see on your screen. My original stop loss was extremely small. And I quite often like to place two targets. In this example, I had three final targets that I placed dynamically as price moved upwards. Now, you'll probably realize that I had a pitchfork sloping downwards that ended here at this red warning line. But what I would like to do, as soon as I believe that the trend might reverse, I like to slope a pitchfork in the direction that I want to trade in. And you can either be placing targets, it all depends on your risk reward ratio. If it's efficient or good enough, you can place it directly up in line with your center median line. And I quite often, when I deal with corrections, I like to place a secondary target right at the beginning of what I think was a correction, because obviously if a trend was to resume after a correction, one would expect it to take out the area where the correction started from, if that makes sense. So this is what I'll be doing with my target placements. In this case, you can either place them dynamically as price reaches the center median line. In this case, take target off. Second target when it reached the upper median line. In this case, just before it reached the upper red warning line, I was out of this trade. Massive profit and just under a month swing trade. All right, guys. So I hope what I've shown you now, and I hope you agree, has been time well spent. I'll be more than willing to, afterwards, we're trying to normally with Rolly have about 10 minutes Q&A session, sometimes going over to about 15 minutes if you want me to redraw some of the things. But all I really can say is that market geometry really works, and it's really served me really well. It's also opened another window that I've never seen before. Quite often you'll find that there's so much talk about horizontal support and resistance, previous tops and bottoms, where price pulls back to might find support and resistance, which definitely works. But in my opinion, very importantly, that there are angular support and resistance lines that's also within markets. And that's why I use these market geometry tools, more specifically the pitchforks, knowing that when markets do approach them, that you'll at very high degree either see huge reversals or temporary corrections appear. So guys, I hope you enjoyed what I've been talking about now. And now that you've seen how I applied my methods to find high reward trades, I want to show you a shortcut to getting these high probability setups starting today. And let me just get on. So here's what I'm going to do for you guys today. I'm going to offer you my exact trading plan. And this is not a strategy. It's a complete trading system. Now, every single market aspect you will encounter, the system will cover everything from the entries, exits, trends, corrections, the indicator I use and why, advanced money management and trading psychology, and everything completely packaged as a complete methodology. My course is the exact blueprint of how I trade and contains 6 modules that we sometimes expand on when we decide to add new content. Now, whether it be videos or more advanced techniques, I actually do cover more advanced techniques for those that actually grasp this technique, that apply them to their own charts for a while. Because I mean, market geometry, you can either make it as complicated as you want to or not. I try to keep things as simple as possible, but it's definitely also space for some more advanced techniques, which I have actually included in the course recently. So guys, it contains the exact criteria that I use to understand what the markets are doing, how I want to trade it, and what my entry, stop loss and target ranges are. Guys, welcome to the Exponential Profit System course, or the EPS for short. And all you have to do is basically follow along. And guys, just some quick reviews from current members before we go to the Q&A. I just want to talk about Ian for a second. He's been one of our first members. This is absolute gold, guys. I've done Richard's training course and I'm now profitable. I've tried 4 different courses, but this one works. I feel like a sniper. Thanks, Richard. Then we have Stephen, that's also been one of our first members. Thanks, Richard. Guys, Richard is the real deal. Since discovering the videos and finally buying some courses, market geometry has greatly increased my trading success. My recommendation is to learn all that you can about the Andrews pitchfork. And here's one recently from Black Rose Society. That's probably not the real name. Listen, I just started using the market geometry strategy, using the pitchfork on a daily and 4-hour. Now I hit 360 pips back testing. Man, I love you. Thanks very much. Okay, guys, and this brings me to today's offer. And here's what you guys are going to get. I'm going to give you my complete methodology for a value of $997. Unlimited support by either my support team, and if they can't answer any questions, I'm available. I love replying to everyone that takes my course in person. That's a great value of $797 US. The complete pitchfork trading included in the course for $397. 3-part implementation training. What I've done here is just to basically help you hit the ground running, implementing these tools properly with your own trading. And then I have 5 bonus lessons, which is actually a video course. It comprises over 3, I think almost 4 hours of video material for a total value of $297 US. And then if you do decide to later join an EPS forecast team, then I'll give you a chance to work with me personally for a value of $997 US. Guys, there's a total value of $3,782 US. And I really hope that you can see why it's a good deal at $3,000, especially with some of the testimonials you've just seen. $997 would be amazing, but since I have a special favor to ask, I'm going to go even lower today. And that favor is, guys, that if you do decide to take this course, that you please give me some more reviews. I really enjoy reviews. I like hearing about success that my members have. And that really makes me proud, especially with all the hard work I've put into this. So guys, just for today's webinar, before I take the Q&As, you can get started today for a webinar special only of $297 US. And with all the services we have, this comes standard. You have a 30-day money-back guarantee. If there's at any time you decide you do not like this, you can ask for a refund, no money asked, and we will be glad to refund you. So there's a link down here, westmarktrading.com/Krichel. I'll probably have Rolly drop some of the links there in the chat. And guys, there's tremendous value. I've put a lot of effort. This is my life's work. This is a system that really works well. And like I said, you've got nothing to lose. A very good price point today. And you also got that ironclad 3-day money back guarantee. Right, Rolly, if you're there, I will take some questions now. Hopefully.
Absolutely. Well,
That wasn't
Richard, first
too
of all,
quick.
yeah, no, thank you for getting things started today and for a great presentation. And I would say this, there was a number of questions that came in, and most of them you probably wouldn't be surprised to learn gets back to, how do you draw those pitchforks again? So there was that. If we have some time, maybe you could show some examples there. But there were a couple of other things that came up as well. Atik asked the question, for example, he says, do you ever use Elliott waves to determine anchoring points for your pitchforks?
Absolutely. Now, this is a great question. A lot of people, when they hear Elliott wave, they want to run for the hills because it can be a very subjective sort of analysis technique, forecasting technique, whatever you might want to call it. For me, it is very important to apply Elliott wave over corrections specifically. I believe because they, to me, is one of the only analysis techniques that defines corrections really well. But that being said, if you're going to start breaking your head, let's take this for example. What was this, an ABC or an ABCX ABC? You know, there's a lot of confusion that can sit in here. This is why I want to break things down, and I use pitchforks as my guides as to where I believe a correction might end. And I also teach a lot about looking at while a correction is materializing at the underlying behavior of this correction, switching to smaller timeframes, looking at price structure, and then using that as a guide to figure out, in many instances, I might not actually be right about the correction, but in most instances, let's take this example on gold here, for example. If I were to use, like I mentioned before, I like to get into the end of corrections using a shift pitchfork in most of the cases. You could have used that lower low here and that one over there. And it would have given you, and what I would quite often do is create a zone where I believe price might reverse from. Now, this is why Elliott wave becomes really useful. We had one drop here that went pretty low, this lower low here. And if you understand a little bit about price action, I go into great detail in the course. You don't just necessarily get into a trade that just went one direction. You want to see some sort of move down, and especially momentum divergence, which is one of the entry conditions that I incorporated trying to get into the end of corrections, and then use reversal candlestick patterns, etc., to get into it. So yes, I do use Elliott wave, but I applied loosely, if that makes sense.
Sure.
I use mostly pitchforks to act as my guide into areas where I believe a correction might end. And just to answer the first one about drawing pitchforks, whatever your platform might be, like I mentioned before, I use either the standard or I use a shift pitchfork. Now, the shift is what I use over corrections, and you need to select 3 anchor points. Now, when I'm dealing with a correction, you want to select, let's say, price moved lower, and then it didn't move back to the upside again. This was your first proper sort of attempt to break this high again, but it failed to do that. And when price moved low again, that would be the opportune time. And this is a daily chart. I mean, it gives you more than enough time to then go draw your pitchforks to this low before price broke this low again, and the lower high prior to this move to the downside before price broke that low, if that makes sense. And that creates an area where I believe a correction might end. But I don't just use shift pitchforks. I also use standard pitchforks. And I believe this example I had here in Australian US dollar will probably be a very good example. I sloped a pitchfork in the direction of the strong move to the upside. I could have used different settings. In this case, if I use the shift setting, you'd quite easily see it didn't contain price properly. For a very short period of time, it did. But if I would go to the standard pitchfork, here it did pretty well. There was actually a little trade over here. When price pulled back to the center median line, this as well go to a lower time frame, but just for time's sake, I have to go back to my shift pitchfork. This correction stopped where price reached a confluence of this center median line that slopes with a trend and this lower median line of my shift pitchfork that slopes in the direction of the correction, if that makes sense. I didn't actually trade this one. This is one that I've traded. A fantastic example of market geometry in action. Price reached this upper red warning line, which I talked about, which quite often will reverse extreme moves in markets. In this case, I just assumed it was a correction. Might have been wrong. You never know. You can't forecast the future. But even if you thought this was an ABC, look what happened over there.
Mm-hmm. So, Richard, you know, we have a couple of minutes left, and I want to squeeze a couple more questions in. One of the things that came across to me is that it appears to me that you probably look at a market using a couple of screens. I think you mentioned that, for example, you have a higher level chart that you use maybe your pitchforks on, and then you had indicated you showed a different chart with the MACD histogram on it with the candlestick patterns. Is that correct? Is my assumption correct that you're analyzing the market using different time frames, different tools?
Yes, we do use multiple time frames. I'll quite often have an operating time frame, like many people would call it. So if you use a 4-hour chart, for example, and that's your operating time frame, as soon as I believe I'm getting a correction, I'll see that happen in my 4-hour chart, and then I'll drill into a 30-minute chart. For example, sometimes some guys prefer a 20-minute chart, as long as it's a smaller time frame. And then you can even drill into a 10 or 5-minute chart to really fine-tune your entries and get that stop as close as possible and really maximize your profit. But then let's say the correction is happening on the 4-hour for me, but I'm zooming into low time frames to read price structure properly, perform my corrective pitchfork analysis, identify an area, and then wait for those entry conditions to appear on an even smaller time frame. But then what I want to do is I want to switch back to the 4-hour once I'm into a trade. And obviously then I'll know if that was the start of a correction in 4-hour, that could be quite a decent way down, let's say a bullish market correction downwards. And in many cases, like this example here, for example, if I had a daily, I'll be looking at a 4-hour and then drill down to 30-minute for my entry conditions. And you'll have quite a substantial move to the upside to target the beginning of what you've seen was that correction starting point. Okay.
All right, terrific. Well, Richard, I tell you what, the time flew by. And one thing I did not know, let me see if I understand this correctly. You set the world record swimming 223 miles around the island of Mallorca. Is that correct?
That's right, yes, in 2014.
Did you do that on purpose or were you escaping something?
No, there's a bit of a history there. Yeah, it's a bit of a sad one. Actually, my brother died while I was living on the island. Many years back. I lived there for 6 years, and my brother passed away in South Africa. And this might sound a bit crazy, but good friends took me to the beach. I couldn't get back to South Africa, and I pretty much just got drunk on a bottle of brandy, to be honest, bawling my eyes out. And I went for a snorkel, of all things. I mean, who would go for a snorkel? And I just had this crazy idea. It's like one day I'll come back and I'll swim around this damn island to honor my brother, And it took me 11 years later. I didn't train for 11 years, believe me. I trained for about 2 years to try and do this.
Wow.
I did what I call a stage swim. So I swam almost close to about 18 miles a day for 21 consecutive days.
Good Lord.
Yeah.
Good Lord. Well, Richard, once again,
thank
you for sharing that. I'm sorry for the reason for that, but thank you for sharing. But it's still an amazing person, folks. Thank you, Richard, for joining us. I know you're many hours ahead.
So just past 5 now, so it's time to go home anyway.
Oh, no bad. Not too bad. But thank you so much for coming. We know you're a busy guy and we appreciate your time.
Thanks,
Rolly and the team. All the best. Until next time. Take care.
Thanks.
Absolutely. So folks, once again, that was Richard Krugel getting things started today, and just want to let you know his special offer about the exponential profit system methodology for leveraging the science of price action, the process and the probability analysis, the accurate, dependable system for trading any market. And I think he said his special offer was $297 off of a price that's normally discounted at $997. So if this is something that you find interesting, and particularly about pitchforks and how he uses them in the markets, I recommend that you take a real hard look at this special offer. And Pat, with that, we are